Okay, welcome to this live session, the part-time traders live session. Well, it's as if we have not been in the market okay, for a very long while. We've not been very active trading the charts, taking trades left, right, and center. That is because we are being extremely careful, as the market condition is not really set for us. In fact, even those trades that we plan to take in the very short term, we looked at it together, and in fact we told ourselves it is better to stay away. Okay, whenever the market is clear enough, we will start trading live again. Okay, it is better to miss than for us to miss our equities. It is better to stay out of the market than to keep forcing trades and losing them altogether. All right, let's look into a few pairs for today and just try to remind ourselves the possible directional biases, and if we find anything valid in those directions, we are definitely going to be trading them and posting those signals in the Telegram channel as well. Okay, the first thing here is the euro against the American dollar. Well, price is making some good efforts to return to the upside. It's making some frantic efforts to turn to the upside, but it is facing a heavy level of resistance, a very heavy level of resistance. If price is able to break above the 1.168 1.1618 area, okay, around that area, if price is able to push through 1.1618 area, if price is able to push through this zone, then the bulls will be in control of this pair. But for now, this is a serious boundary that price needs to pull through before we can say the bulls have taken over. For now, the bears, price is still within the bears territory, and it is not really safe to hit on your buy button against that area. Okay, that's the area in the 4 hours time frame. Let me try to zoom in this chart a bit. I hope you can see this clearly. This is the area I'm talking about, that level there that was acting as support, and right now it got broken and price is still trading below that level. If it comes above that level, then the bulls are likely to keep pushing price to the upside. Tomorrow will tell. We will know about that by tomorrow. Okay, now to the next one, the euro against Australian dollar. Yesterday we did analyze this pair where we mentioned that this is a low quality signal, that breakout congestion continuation pattern, that it was a low quality signal because of the quiet market condition as of yesterday. And of course, this level is not really significant in the daily time frame. Even though we saw price trigger the entries to the downside, you can see how we got an immediate return to the upside, and chances are that price will keep pushing to the upside by tomorrow. Okay, so if you were involved in this trade, if you were short somewhere there, it is better to even close the trade out completely. Okay, just close it out. Look for trading opportunities elsewhere. As it is, price is still below our former support level, which is resistance. We cannot hit on our buy button because in our experience we know that price will push to the upside. We don't want to tempt ourselves trading against that level of resistance. It is better to have price push to the upside before we look for buy entries. In the other hand, price can still keep pushing to the downside, but the chances are very slim that that will happen. All right, in the 1 hour time frame, you can see how in fact that is now a fake breakout. All right, it is now a fake breakout of that level, support level. Price came as if it was going to pull through to the downside, then immediately came back up. So you should expect some more upside, taking out those stop losses that were placed around these areas. All right, let's move on to the next pair very quickly. The New Zealand dollar against the Canadian dollar. In the 1 hour time frame, the New Zealand dollar for today took off right there. From there on, kept pushing to the upside without looking back. I think that happened with most of the Canadian dollar crosses, where we saw abnormal market volatility. The market just moved without giving any pullbacks or possible entries. In this pair, if you look into the 4 hours time frame, if you are a 3 SMA trader, if you apply the 3 SMA indicator, you will see how. Let me just look. Okay, no trades running. If you apply the 3 SMA indicator, you will see that price is pulling back to the dynamic area of resistance. The best point to make that a pullback is somewhere in there where we got the previous swing low. So if we get a bounce from here, we will not be interested in that trade, okay? But if we get a bounce from that area, that previous swing low, then we'll be interested in that trade. But from what I am seeing, it seems this 3 SMA setup might not play out. This is happening quite late. Also, if you take your Fibonacci retracement tool from the high to the low, this is a good area of confluence, a good area of resistance. If price is able to make a sharp move into that area, it should be finding resistance there. Again, that seems to be happening around outside the dynamic area of resistance. That is why this setup quality is becoming very low, okay, very poor. At any rate, we will keep it on the radar and just follow to see what's going to happen. All right, let's see the again. I am noticing that the New Zealand dollar is gaining some strength, so this setup again might be facing some troubles. And there is also some news economic event. We'll check that out later. The American dollar against the Canadian dollar. Like I said, the Canadian dollar had an abnormal volatility for today. You can see how price just took off from here straight on to the upside, even though we're having a expanding triangle in this pair, no clear directional buyers. If you were trading here, I am just wondering if you were able to score any profit from this type of market. It's a horrible one to trade. If you take a trade thinking that price is going to keep pushing to the downside, your stop loss would have been hit. It's a terrible market condition that you want to avoid. All right, in the daily time frame, a price bounced off a trend line, okay, and it's looking bullish. It's looking very bullish. It seems it will be pushing to the upside, but there are still multiple levels of resistance to deal with. It is not a highway free of traffic. There are still problematic zones around that area, so that's the only reason that we'll not be looking for long entries here. And that is the problem with quiet markets. When you have very tiny multiple candles in the chart, they tend to create multiple levels of support and resistance, thereby giving us roadblocks everywhere. So this is a roadblock here, this is another one here, so this is not happening at a good zone. But at any rate, if you must trade this pair, you want to be looking to the upside, okay? You want to be looking to the upside. Okay. This one here has been violated, so we can change this level. We can keep it here. Delete this one. All right, so pull back from here on, push to the upside. This is a good level of support. Former resistance now broken. You need a pullback and a continuation move. That's what should happen for the American dollar against the Canadian dollar. But again, like I said, it is not a highway free of traffic, so it is best to simply avoid the chart. Now, the euro against the Canadian dollar, you can also see another Canadian dollar pair. See how price just took off straight to the upside. Okay, that is highly untradeable. In the 4 hours time frame, you can also see a nice 3 SMA setup. This is the one that I am liking the most, but that point of confluence wasn't hit it would have been best to be hit around the dynamic area of resistance, but now it is falling right outside, which is not a good thing for us whenever we are trading this strategy. Anyway, let's just keep it on the radar. But this point of confluence is a good level of resistance. We might see price come down a bit, then from there on another push to the upside. You want to be careful with that. If we want to take an aggressive entry, we would have placed a sell limit order around there and cash out profit entirely somewhere around here. As price makes that turn, that wave to the downside for push back up, you close your trade altogether. But that is quite risky trading. At any rate, we'll keep it on the radar again and follow using the 3 SMA trading approach. All right, American dollar against the Japanese yen. This is a more confusional pair. Price is confused itself, doesn't know where to go to. You can see the channel in the 1 hour time frame. It's been swinging up and down. That's it, within that channel for some days now. So it is hard to trade in that zone. If you look into the daily time frame, price is currently reacting off that inner trend line with the most harmonic bounces. That reaction for today seems to end with a pin bar. And one thing I am noticing again is that we are having the 3 SMA running right here, which is also a bullish characteristics. Okay, it's looking bullish, but trapped between support and resistance. The red line is support, the green line is resistance. So whichever direction it breaks to is where we might see momentum. Today's pin bar might be a hint that it is going to break to the upside, but we'll see the nature of the breakout. Most times you get a fake breakout. So let's see what's going to happen. I am anticipating a fake breakout. If it doesn't give us a fake breakout and we find the breakout pullback continuation move in the 4 hours time frame, which is the trigger chart, then we'll be looking for possible entries in the 4 hours time frame. For now, it is still bleak. Let's wait for the breakout of either of these 2 levels, this support or this resistance. We need price to move away from this junction of the chart. All right, let's look into the next one. New Zealand dollar against the American dollar. Well, another big pain. Price has been sideways, moved up, came back down. I thought we were going to keep pushing to the upside, but that didn't happen. In the daily time frame, we are trading around support zone. We are trading around support area here. The bears are not giving up, but in the very long term, the weekly time frame, you want to be really careful going short, because this is just a wide channel in the weekly time frame. Even though price might go down somewhere in there, it will come back up, and this is the next target. So if you are looking for a trading opportunity here, you want to be looking for buy entries in the New Zealand dollar against the American dollar. There is a powerful news announcement coming for the New Zealand dollar. We'll be looking into the economic calendar. I am sure all of this space here might be utilized for that news announcement. If price reacts off that support area, might be seeing a heavy bounce to the upside. And finally, the Australian dollar against the New Zealand dollar. This one here keeps pushing to the upside within this channel. This lower leg of the channel has been confirmed. That's the first bounce, second bounce. This is the first bounce. We are expecting to see the second bounce. Okay, second bounce. So we are just simply going to be placing a sell limit order somewhere there, or stop loss above, to see if on that news announcement we are going to be triggered for a down push. Okay, yes, interest rate in 2 days. Is that 2 days? I don't really think it's 2 days. Okay, well, we are going to be seeing if that news announcement will trigger the entry there. So I'm going to be placing a sell limit order. Okay, let me bring in my lot size calculator. I am proposing my entry somewhere around in here, very close to the red line. my stop loss should be above the red line. I don't want to risk 1%, I want to risk 2%. So let me edit my lot size calculator. Let me edit that 2%. Pending order work best in this type of market condition. Okay, so my entry should be somewhere close to the red line. My stop loss somewhere above the red line. I'm risking 2%. So I am these are the entry parameters. You can see that clearly. You don't need to these are the entry parameters right there. The entry level, that's it. Stop loss level, that's it. I am risking 2% of my account. The recommended lot size is this. If my stop loss is hit, this is what I will be losing on my account. From my entry to stop loss is about 141 pips. All right, that's my those are all the details. So I'm going to place the order. All right, so 1.54 pending order is a sell limit at price 1.1109 level. Stop loss is at 1.1250 level. So I'm going to place the trade, keep it there. Hopefully the news announcement will trigger the entry. Okay, and if it triggers the entry, it will be triggering that entry around resistance, possible resistance area. At this box somewhere in here, I am expecting to see a reaction to the downside. Okay, this pair is still bullish, so I'll place the order right now. All right, that order is set. I'm going to remove my lot size calculator. I hope you have gotten the level. If you have not, you will have to scroll back the video to see that level. All right, so that's it. It is quite far from the entry level, but that is it. The entry has to be around close to possible areas of resistance. All right, and that's the stop loss. Entry there, stop loss there. This is the only trade that I have running on my account. That's it, nothing else. So I'll just keep that trade for now. All right, folks, that's basically all. Nothing much. The chart has been really a risky one. You need to be absolutely careful. It's best to avoid trading when the markets are not clear. Let's take a look into the Forex Factory economical calendar to see those interest rate announcements or those high impact news announcements that we are expecting for tomorrow. All right, inflation expectations from the New Zealand dollar. This is a heavyweight news announcement. It should be affecting that. That's why I placed that order. Hopefully it will be triggered. Then we have interest rate announcements coming tomorrow, again for the New Zealand dollar. That's a late news announcement. For some people it is next tomorrow. For me it is very late tomorrow around this time. Okay, around this time the action will be taking place. I am sure I will be doing the review before this news announcement. Okay, so that's coming for the New Zealand dollar tomorrow. New Zealand dollar is going to be feeling the heat of this news announcement, and that pending order that I have placed is going to be there until the news announcements are over. If it is triggered, good. If it is not and price just pushed to the downside, I will delete my order. All right, thanks for being here. If you have questions or contributions, as usual, please feel absolutely free. Post them anywhere, YouTube, send it to our emails, we'll respond to them. Do have a nice rest. Again, don't force any trade. If there is nothing to trade, avoid the charts completely. Save your money. Better times will come ahead. The market is always here. Bye bye.